Good morning. I hope everybody had a good weekend. It is Monday morning and we're just about ready to start a new week. The futures are slightly green, but it's struggling right now. Last week we had a great week. It was one of the first weeks in a long time where we had this massive volume of buying, and you could really see the volume coming in and taking over the market. For the week, Microsoft was up 9.28, which is, it's not quite double digits. It's not as great as Google was up 11%, Amazon was up 12%, Tesla was up 15%, and continues to look very bullish on the chart. The biggest part of last week was that the financials finally decided to come in and play. And when the financials come in and play, the entire market moves. You could see that all that green right there on the financials, it just made for a really nice week. Let's go over some of the price targets for the week. We'll start off on SPY. The critical numbers for the week, there is a gap right here at the 401.44 level for SPY. I do expect the bears to come in to play here, but you could see already today the 20-day moving average is working as resistance, so we might get a little bit of a pullback. I expect to get up to the 401.44 area. I do think the week will finish green, but I do think we need to get a pullback down to fill these gaps down here. We do have a gap at 378.06, which is where I would expect buyers to come back into the market. July seasonality, we normally get a July rally. I don't expect a hard rally that's going to take us even close to all-time highs. I do think we'll finish green for the month of July, but I don't see us getting past the 400 area in July. If it happens, I'll be pleasantly surprised. I think we're going to have more sideways action than anything else, with the market trying to normalize. Like I've said before, the low of the year on midterm election years comes in September, October. So best case scenario is between now and then we go sideways to maybe slightly up. Again, areas to look at for SPY. We have the 20-day moving average at right around 394, 393.20. We have the top of the trend line at 401.44, and we have the 50-day moving average up here at 404.15. On the bottom of us, we do have that gap at 378.06, and then we have a gap down here at 365 area. So those are the areas to look at. These are the areas that I wouldn't be holding positions past these areas, especially the top of the trend line. I don't think we'll get to the 50-day this week. The risk range that I see for SPY this week is 401.44 on the top side and 378 on the bottom side. Moving over to the NASDAQ. The NASDAQ looks much better than the SPY, to be honest. Right here on June 17th, SPY made a lower low and the NASDAQ did not. That's the first time that's actually happened this entire year. So it looks very promising, but we did leave this gap right here and it's going to have to get filled, and we did leave this gap right here and that has to get filled. So for the NASDAQ, we do have a gap at 284 that needs to get filled and a gap at 275 that needs to get filled. Above that, we are past the top of the trend line, or at least the very bearish trend line. We still have another trend line way up here, but the next area of resistance is going to be right here at that 304 area, the 50-day moving average. In an ideal situation, what will happen is we'll move up to that 50-day, come back down to the top of the trend line, and then continue up. That's an ideal situation. But like I keep saying, this is a midterm election year. We do have volatility. So the alternate scenario is that we get up to the 50-day moving average and make a new low. That's always an alternate scenario. The Russell, it's the I keep saying it's the leading indicator to me of change. It's what tells me that the market's wanting to change. But look at the Russell right now. My goodness. The Russell has the 20-day moving average right there at 177 to compete with. On top of that, it has the 50-day moving average at 182. And on top of that, it has the top of the trend line at 185. That's 3 areas of resistance that it has to go through. On top of that, it left this gap down here at 170 that needs to get filled. So likely scenario, we get to the 20-day, get rejected, fill that gap. And then once we fill that gap, maybe go up to the 50-day, come back down. And then from there, we go up to the top of the trend line. And then we see what happens from there. This is a tough looking chart. It doesn't look, there's nothing bullish I see from that chart. When I look at this chart, I see a low, a lower 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 low, and a lower low. There is no sign of a turnaround on the Russell. And if the Russell doesn't turn around, I just don't feel like the rest of the market's going to turn around. The NASDAQ looks pretty good, but it's still low, lower low, lower low. Until we have a pullback that gives us a higher low, I don't see this market turning around. Even though last week looked very good. Let me show you something that doesn't look as good. We have the Dow Jones right here. And last week we had this very bullish green candle that opened and then closed at the top of the candle. Well, we've actually had that happen on the weekly time frame several times this year. You see it right here. It opened, closed at the very top of the candle. Looks almost exactly like this candle. Look what happened next. Over here, opened, closed at the top of the candle. Looks almost exactly as these two. Look what happened next. Opened, closed on top of the candle. Look what happened next. It's the normal scenario. And on a typical bear market, on average, there are 6 weekly candles that look exactly like this. This is the 5th one of the year. So if on average it's 6, this could be the last one of the year. Or if on average it's 6, we could have 2 more, 3 more this year. So that's something just, it's not a solid indicator, but it's just something that I noticed, that this is the 5th time that we get a weekly candle that closes at the very top. And the last 4 times we've had a drop afterwards. As far as some of the indicators that tell us the strength of the economy, we have copper. Copper is used for electricity, for wires, for basic construction, infrastructure, build back better. So when infrastructure is strong, the economy is strong. When we're building things, there's a lot of need for copper. And if you could see copper right here, it has this clear markup phase, it has the clear distribution, and it has a clear markdown phase. So the movement that the stock market has done over the last 6 months, copper just started 3 weeks ago. Lumber, another indicator of the strength of the economy. We have a clear markup phase, we have a clear distribution phase, and we have a clear markdown phase. So that's copper and lumber, both very clear indicators of the economy, both very clear indicators of how strong the economy is, and neither one of them are looking good. So with that said, even though last week looked like that, I closed almost every position that I purchased last week. I'm still going to continue to day trade, but I am not purchasing for a long position yet. For long positions, what I really want to see is a pullback to a resistance line, holding that resistance line and moving up. I want to see that higher low before I actually start holding for a long position. Now, there are things to measure. There are things that you should look at that give you indications on when it's time to come in. For example, the SPY, here's a little inverse head and shoulders. And for me to guess how high we're going to go from that inverse head and shoulder, I measure the top of the neckline to the bottom of the head. And once I take that right there, that tells me that we're going to go right around to that 50-day moving average. If we get to that 50-day moving average, and at that 50-day moving average we get rejected, come back to a gap fill, and then move up. Once we break that the second time, then I'll feel more comfortable holding for a long term. In the meantime, stay nimble, stay safe, trade what you see, not what you think. Don't keep any emotions in your trades, and stay healthy out there, stay safe, and keep everybody informed what you're doing. Let's help each other out, and let's help each other be better. Have a great day, guys.